Greetings and salutations. We made it to May the 1st, 2026, 10:03 a.m. Friday morning. And we know this is a peak year. Thanks to George Tritch, 1874, laid out this macroeconomic data of A, B, and C years. B years being years of good times, high prices, and times to sell stocks and values of all times. All times and all types, I would say. All kinds. Look at 2026 being a peak year and 2032 being a year to really buy things on the cheap. 2032 is a C year of hard times, low prices, and good time to buy stocks, corner lots, and so forth. Going to ride that value into 2032, a peak year, because in 2035, who knows what's going to happen. Again, we know what happened back in 2020 and 2000. Remember Y2K and the dot-com bubble bursting, right? And we know what happened in 2020, right? The world was locked down, basically. The world was shut down. And we don't know what 2035 is going to hold. So we're going to take some of this value here and ride some of that value in 2026 and 2027 into 2032 and get as much as we can of whatever assets we're going to accumulate and ride that bad boy to 2034, because in 2035, who knows? Who knows? Just who knows? Let's immediately look at the chart, and today we want to evaluate when the next parabola is likely to come in. We're going to use statistical pieces of information in the chart. We're going to theorize and hypothesize using artificial intelligence and look at macroeconomics and specific types of catalysts that is currently playing. And we're going to project the best time for the parabola. And you can see when I put my cursor on the pi cycle bottom tag, to the right of it is the parabola. Put my cursor on the pi cycle bottom tag, to the right of it is the parabola. And you notice the parabola is typically higher, a higher point. My cursor on the pi cycle bottom tag, and to the right of it is the parabola. And we can investigate because there is more data to always look at, right? Let's take that one off screen. Let's just look at this. If you notice, the markets in the background are warm, cool off, and parabola. We can see that pattern. Warm, cool off, pi cycle bottom, warming up into the parabola. We can see here. Warm, cools off into the parabola, warms up again, or warms, cools off into the pi cycle bottom, and warms up again into the parabola. This one is really nice, very similar to the warm, cool off, warm, warm, cool off, warm. This one here, warm, cool off, warm, slight cool off, warm into the parabola. Very interesting. The pi cycle bottom, very unique. You know when this green line on the stochastic RSI touches this line here, the pi cycle bottoms come in. So every time it touches, pi cycle bottom. Every time it touches, pi cycle bottom. When it is touching and turns up, that could be interesting. Touches, turns up, that could be parabola. Touching, turns up into the parabola. Touching, turns up into the parabola. So what we want to guesstimate here is the typical time frame it takes to go from pi cycle bottom to the parabola. So I'm just going to do a rough estimate here. Pi cycle bottom into the parabola, 121 days. You see that? Pi cycle bottom into the parabola, just measuring from left to right, 121 days. Let's do this one. Pi cycle bottom into the parabola, 151 days. All right, and let's measure this one. Looks like it's here, pi cycle bottom into the parabola, the middle of the black tag there. And that's 273 days. All right, so we're going to take those time points of 121, 153 or so, and 273 days, and try to guesstimate based on the information in the history of the chart of when the next parabola is going to come in. Because you can obviously see when the parabola comes in, it's like the U. You want to be at the bottom of the U because the parabola is definitely signifying increase. Look at the candles. Increase. Also, what we can take note of is the golden zones that you may see here coming out of the gold zone, the little square there. Increase. This one dips down out of the golden zone, increase. Here you have out of the golden zone and increase. You have a long wick down out of the golden zone all the way from down here to increase. And of course, presently we are in a golden zone scenario, and out of the golden zone increase, hence the parabola. Now, based on the information in the history of the chart, we can go down after the pi cycle bottom because it is a moving average. But that moving average is flagged. You can go down a little more historically speaking, but then comes the parabola. And notice this here too. Up, down, up. Very unique. The rest of them were down and up into the parabola. And this one, if we were to take those candles off so that these current candles can spike up, we can see down into the pi cycle bottom and up into the parabola. Now, of course, this is not the logarithmic view. We know, based on the information in the history of the chart, I can put on the logarithmic view, and that way you see price action making more sense. I just like this particular view because it's somewhat easier for me to take measurements as far as percentage increases. If we put on the logarithmic view, then you can see how price has been moving, and you can look at the horizontal line to the right of the screen. This area here is price action. You can see how prices have been going up and down and up. $2.98 down and up and down. I just prefer a particular viewpoint. Now, we let artificial intelligence spar just a little bit. Grok and Claude with their models spar just a little bit. We got some typical information regarding what was based on in the history of the chart. We can see 121 days, 151 days, and 273 days from pi cycle bottoms to their parabolas. And we can just look at the information and ask artificial intelligence to strategize, theorize, and hypothesize with macroeconomic events and catalysts to theorize when our next parabola is going to come in. Okay. All right. So we have these data points here in the chart, and they're rough estimates because it's on a 1 month chart. Okay. Just keep that in mind. They're rough estimates because we can go to the 2 week chart, to the 1 week chart, the 1 day chart, and the 4 hour chart and plug out exactly where the pi cycle bottom flagged in. So this is just a rough estimate. And again, not financial advice. All right, so we got Grok and we got Claude, specifically Sonnet 4.6 in Claude, sparring back and forth and combining information. Claude initially was asked to give me three good hypotheses and theories, a good thesis of when the next parabola will come in based off of the most recent parabola correction pi cycle top we just had. Okay, and this question was posed to both Grok and Claude. Claude gave me, for some reason, 4 scenarios, and that's great. So I uploaded the Grok information of what Grok gave me, and Claude did a comparison, and we can see where they agree and where they sort of don't agree. So points of agreement: Wyckoff method, accumulation in $1.10 through $1.50 confirmed by both. They both agree. Clarity Act as primary institutional catalyst. They both have consensus on that. A Clarity Act passing can cause alternative cryptocurrency bull run to include just a bull run altogether. So Elliott wave 2 and 4. Now, 2 and 4 correction, those are usually downturns. There's 5 waves in Elliott wave theory. 1, 3, and 5 are increases, with 2 and 4 are pullbacks. And we can see wave 3 and 5 impulses, they both agree. 273-day rhythm as the strongest anchor, both use it. They really like that 273-day time frame as a strong anchor. Fibonacci time ratio influences on spacing convergent. They agree. Groks, $1.28 to $1.30 support floor levels, and $1.45 to $1.50 short-term resistance levels. They both had consensus on that. Where they diverge or not totally agree, Grok places the pie bottom late quarter one. Remember, quarter one is January, February, March. That's quarter one. So why would Grok place the pie there? No, it happened in April. So early quarter two, 2026. Okay, so it's giving a wider time frame there. It really occurred early quarter two, right? Versus my earlier estimate of April 2020. It should say 6, right? Nothing's perfect. Grok's range 180 to 250 days overlaps but differs from scenario A's 180 to 210 days. So Claude had a difference of 3 days on the front end and at least 40 days on the back end. So Claude's range is a little tighter. Grok projects a price point, $5 to $10 for the first range, and Claude's A scenario was a little bit more conservative. Grok's range 400 to 500 days extends further than the 350 to 420 days by Claude. That's a big difference in the time frame. 80-day difference, really. 50 days on the front end, 80 days on the back end. So Grok was really launching it out there. Grok omits the Japanese carry trade, emits ISO 20022, implementation and blockchain, emits anything regarding Iran peace negotiations, and just leaves out geopolitical catalysts entirely. Okay, so we combine the two, and we have Claude fine-tune its information, since Grok is free, but Claude seems to be more on a subscription, and you can pay for the monthly subscription if you like. All right, let's look at this 183 to 220 day scenario A situation. And notice the percentages here. The likely to occur is scenario number 2, the 151 day time frame, compared to scenario number 1, the 121 day time frame. So this one has strong reference point as far as pulling information from there. So it's probably B, A, and then we'll look at the other two. All right, let's look at this. Now, keep in mind all of the highly political and technical stuff that comes into play, to include indicators, right? And usually people aren't thinking along this level. We tend to avoid religion and politics, but those are two of the main things that can be looked at, because there are certain catalysts out there that can cause markets to go one way or another. All right, so let's look at this. Previously, September to October, right, should be 2026. Recalibrated forward per confirmed quarter 1, 2026. Pie bottom, both Grok, 180 to 250 days, and my original framework converge. So we like the 183 to 220 days, because Claude has fine-tuned this information, and it's saying this parabola is likely to occur between October and December 2026. Okay. Now remember, the parabola is the peak. You would want to be in on the horseshoe, the bottom, prior to the peak. Let's look at this. The regulatory ignition plus technical compression thesis. Grok's analysis confirms the Clarity Act passes the House and is targeting Senate markup in May 2026. Doesn't always happen that way, but May 2026. A number of people, politicians, have come forward and said, May 2026, we're gonna get it done. This is the most imminent binary catalyst in XRP's history. Passage triggers institutional positioning that compresses the accumulation phase, pulling the parabola into the 183 to 220 day window. The Japan or Japanese carry trade factor is critical here. Japan's Q4 2025 carry trade unwind with the yen strengthening against the US dollar created a temporary liquidity drain across risk assets that likely contributed to XRP's bottom in price, but not Pi bottom. XRP's $1.11 capitulation low. A carry trade reestablishment as the yen weakens again under continued Bank of Japan normalization. Historically floods USD denominated risk assets with leveraged capital directly benefiting XRP liquidity. ISO 20022 migration adds structural pressure. SWIFT's global messaging standard. Remember, SWIFT migrated to ISO 20022 back in November 2025. Now in the final rollout phase positions XRP as a native bridge asset for on-demand liquidity between ISO's 20022 compliant financial institutions. As large banks complete migration projected 80% by late 2026. Remember November? Remember the documentation we looked at? So that's big. Large banks complete migration projected 80% of all the large banks by late 2026. We might as well say fourth quarter. XRP utility demand spikes non-speculatively. Beautiful. So it looks like either way, because they're going to be using the ISO 20022 blockchains with an S, with XRP as a settlement token, not speculation, they're looking for a spike in that utility. The 9 and 21 estimated moving average golden cross on the weekly, and remember we just showed the image of the monthly chart, a fast moving signal that Grok also references fires approximately 4 to 5 months post bottom, remember $1.11, or Pi cycle, July through August 2026. Okay, well, that's beautiful. And historically produces XRP's first 50 to 100% acceleration leg. Okay, right? Setting up the full parabola by October, December 2026. Elliott wave 3 of the larger impulses, 3 is usually the largest, 1 wave, 3 wave, and 5 wave usually increase, with third being the largest. Impulse structural initiates here. SRSI, stochastic RSI, monthly reset from oversold completes. Now, you just read some interesting things there, especially regarding things firing up 4 to 5 months after a bottom. Now, again, $1.11 or Pi cycle bottom 4 to 5 months afterwards. That could be some really interesting stuff. All right. Now, taking it from the $1.11, we can look 4 to 5 months past that, and you can see this time frame here, which is interesting. All right. So a geopolitical wildcard unique to this window. If U.S.-Iran tensions de-escalate meaningfully under Iran's new leadership, opening swift connection settlement corridors for Iranian oil trade denominated outside U.S. dollars, XRP's cross-border utility narrative gets an unexpected sovereign endorsement. This is speculation, but has precedent in how geopolitical realignments have historically supercharged payment rail narratives. For example, Russia sanctions accelerated stablecoin adoption back in 2022. Look at the conservative price target. Again, not financial advice. Thesis theory. While looking at technical indicators, we have to see if these geopolitical catalysts play out. B scenario, 273 to 320 days puts us into January through March, first quarter 2027. October, December, third quarter 2026. And of course, keep in mind the Kim Clement prophecies. All right. Let's look at this one. The cycle summary and macro alignment, U.S. crypto capital thesis, both Grok and my framework, Claude, independently converge on the 273-day symmetry as the single strongest anchor for the fourth parabola. Right? They have general consensus on that. The logic is straightforward. The market is fractal and self-similar, and the prior spacing itself, 273 days, generated the most powerful XRP parabola in that cycle. Repeating or modestly extending it produces a January through March 2027 window that is now saturated with catalysts that neither analyst fully captured independently. The United States declaring itself the crypto capital of the world, operationalized through executive level strategic Bitcoin reserve announcements. The Clarity Act, the SEC's withdrawal of the litigation against XRP, creates a structural re-rating of the entire XRP asset class. This is not a speculative event. Okay? The political groundwork is already laid. The rails of the new financial system, ISO 200, is already there, folks. When combined with ISO 20022's completion phase and Ripple's on-demand liquidity volumes growing, remember the ETFs, institutional demand becomes systemic rather than just an episodic. The new Federal Reserve Chair, Walsh, or his successor, navigating a post-tightening cycle with a first rate cut likely in late 2026, triggers a risk-on rotation that hits XRP at the exact moment its utility narrative is most validated. Bitcoin's halving lag effect, historically producing altcoin seasons 12 to 18 months. Post April 2024 halving centers on Q4 2026 and Q1 of 2027, confirming this window. The 50 and 200 simple moving average golden cross on the monthly, the slowest and most powerful confirmation signal, fires approximately 9 to 11 months after the pi cycle bottom. Printing right inside this window, cup and handle, right? Who would have ever known there was a cup and handle formation unless it was brought into the thesis? The cup and handle formation on the multi-year chart, 2022 through 2025, and the handle being 2026 consolidation, projects a minimum measured move of $6 to $8 on the breakout, with extension targets $12 to $18. Japan's carry trade factor. If the Bank of Japan normalizes rates fully by mid-2026 and the yen strengthens sharply, a second carry unwind could create a brief shakeout, dead cat pattern, in Q3 2026. That fits the pattern. Many shall fall within the fall. And of course, you have a downturn in the markets then, so why not overlay the Kim Clement profits with what could possibly potentially happen in the markets, right? It's good to look and see, right? Compared to just not knowing or having a clue at all. Q3, that ironically constitutes the handle of the cup and handle, setting a cleaner spring before the parabola, right? A spring before the parabola. That sounds familiar, don't it? Like right up in here. A spring go up before the parabola. A spring go up before the parabola. I mean, this is making a lot of sense. Swift's ISO 20022 as the largest global bank's complete migration, Q4 2026 settlement volumes through the XRP ledger could reach institutional scale, providing a non-speculative price. Not speculation. Floor that amplifies the parabolic velocity Wyckoff method. Wyckoff, the cost $1.11 through $1.50 plus 9 months, is the largest accumulation cause in XRP's history, proportionally the largest effect. Elliott wave theory. This is the third peak of the larger 5-wave structure, targeting Fibonacci extensions of the 1.618 and 2.618 from wave 1, which had a $3.80 peak, above the pi bottom with a $1.11 low, projecting $8.50 to $12 as a base with wave extension into $18 to $24 if wave 3 subdivides. And of course, you can see the conservative target compared to the previous conservative target. The longer it is, the higher the price. Let's look at the extended target. Big difference, isn't it? Now, let's look at this one. Scenario C. Grok had a range of 400 to 500 days, slightly more extended than the original 350 to 420 days, so it adjusted its time frame. And now we're looking at the parabola taking effect between April through July 2027, peaking somewhere around there. So it combined the information split difference. Again, theory, hypothesis, with some technical analysis and macroeconomic catalysts, all combined into one. Now, let's take a look at this because Congress typically drags its feet, don't it? The legislative delay plus the extended Wyckoff cause and geopolitical normalization thesis. I love that, right? This scenario activates if the Clarity Act stalls, which I expect it to stall. I don't expect nothing to really happen in May, unless we have a cataclysmic event leading into summer, the 2 E's, earthquake and eruption, and I can see some stuff moving under the radar, right? All right. Stalls in Senate filter amendment disputes or the Fed chair confirmation consuming legislative bandwidth into quarter 2 of 2026, pushing the institutional catalyst into quarter 4 2026. Well, hang on. That doesn't sound good because don't the Republicans want to take the House and the Senate? Typically, around these time frames in the midterm elections, don't one party usually yield or give up to another party? I mean, they can draw the maps again, the redistricting. They can see if there's more Republican seats or more Democratic seats. I mean, that's always, sort of been done by Democrats at least. Let's see how this thing plays out. Grok identifies the risk explicitly. Senate markup was eyed for May 2026, but congressional calendars routinely slip 3 to 6 months, right? They never are on time in most cases. We're in recess. But this deals with money, so I don't think they can stall it out too much longer, right? Without regulatory clarity, institutional capital remains in wait and in observation mode. That's okay because that gives you time to stack and time to fill your bags. Extending the accumulation phase by an additional quarter, that's about 3 months. The Iran peace negotiation variable is most relevant here. A U.S.-Iran reapproachment under a cooperative new Iranian leadership, potentially involving XRP, native settlement for humanitarian trade corridors outside of SWIFT's political constraints. Remember, they want to ditch the dollar. They don't want to prop the dollar up anymore as the world reserve currency. That's okay. We got XRP. We have a decentralized settlement token, so to speak. Would be a multi-quarter diplomatic process. Markets would front run the announcement by at least 60 to 90 days, meaning the catalyst fires in this window, even if the formal agreement comes later. Didn't we see that right here? The catalyst fires before it actually fires. ISO 20022 long tail, right? Slow migration, giving it time. Seeing how things work side by side, which system is better, which is more convenient. While the formal deadline passes, adoption among smaller Tier 2 banks and emerging market central banks continues into 2027, generating progressive XRP demand that reaches critical mass in this window rather than all at once. From an Elliott wave theory perspective, if the current structure is a complex wave 4 with the WXY zigzag pattern as Grok is suggesting, resolution doesn't come until 380 days plus, but the resulting wave 5 has substantial remaining upside. Head and shoulder failures. Grok references potential head and shoulders patterns forming in 2026 as a shakeout mechanism, shaking out the weak hands as always, so that institutions can buy low on the cheap. These typically resolve over 4 to 6 months. Consistent with this extended window, the 13 and 48 estimated moving average golden cross. On the weekly, a mid-speed signal. Both analysis reference triggers approximately 10 to 13 months after the bottom, pi cycle bottom, or the $1.11 bottom, right? Fibonacci time extensions, the 1.272, applied to the third occurrence spacing, 273 days, supports the lower bound of this range, the 1.618 of Fibonacci, 273 days. And we got 441 days. Supports the upper bound. Japan's carry trade unwind or re-unwind risk. If the Bank of Japan normalizes aggressively in early 2027, a second liquidity shock extends consolidation through Q1 2027 before the Parabola fires in April through July 2027. Now, just a little bit more interesting, isn't it? How the benchmarks can occur. Now, of course, I'm going to go into the documentation and ask that these be clearly laid out as far as these benchmarks, these catalysts, such as the Clarity Act, the Japanese carry re-unwind, right, trade, and so many other catalysts such as the new Fed chair and so many other things. These are benchmarks in time that can have you go back and look at the report again, and we can rehypothesize and theorize. All right. Let's see what time frame we're in. 31 minutes. Okay. 500 to 600 days, September 2027 through January 2028. And hang on now. We can't get too far out because of this. 26, 27 is close enough. 2019, 2020, close enough. 1999, 2000.com bubble burst Y2K, close enough. We don't want to go too far out. So sometimes things begin to become illogical, but the technical data is still good. Grox, range 3 upper bound, 500 plus days, and the original 480 to 550 day convergence. Both identified this as the outer limit of credible projection. Moved slightly forward due to the confirmed 2026 pi bottom anchor, right, in April. The super cycle central bank digital currency reserve asset grand realignment thesis, Grok and Claude's original framework both treat this as the most speculative but not dismissible window. The conditions required are a convergence of structural regime changes rather than incremental catalysts. The multiple are now concretely in motion. For this scenario to activate, the following must unfold. Number 1, XRP achieves formal designation as a commodity under the Clarity Act with the SEC case fully dismissed. Number 2, one or more G2 central banks integrate XRP ledger for central bank digital currency interoperability. I think that's going to be Europe. Potentially including a post-sanctions Iran reconnecting to global settlement via XRP's neutral bridge. That's got to be the plan. It's got to be the plan all along, right? 3, the U.S. Strategic Crypto Reserve expands from Bitcoin to include XRP as a settlement asset. Initially on Truth Social, Trump listed XRP and left out Bitcoin. Bitcoin enthusiasts and Maximus, they got upset. But Trump called it the Bitcoin Strategic Reserve. I think he's going to expand on that later on. He's just playing the long game. 4, Japan's trade fully normalizes, removing the macro volatility headwind and freeing Asia. Hang on. Isn't there a Kim Clement prophecy about Asia? The Spirit of God is hovering over the Middle East and Southern Asia. Earth is shaking and will shake again. All right. Headwind and freeing Asian institutional capital for XRP allocation. The ISO 20022 angle reaches its most powerful expression here if 90% of global SWIFT traffic migrates to ISO 20022 by 2027. Remember, 80% in 2026, right? Q1. So 90% migrating into ISO 20022 by 2027. And XRP processes just 0.5% of 5 trillion daily volume in Swift. By on-demand liquidity, price discovery into a whole new regime. Fundamentally changing everything. Grok identifies Fibonacci time extensions from the 2017 to 2022 cycle anchors, projecting late 2027. This aligns with the 2.618 Fibonacci extensions. The 273-day third occurrence is too far, 546 days, but lands squarely. That 715 days is too far, but the 546-day landmark lands squarely in that window, like perfectly. Elliott supercycle, Elliott wave theory. Now, this is really interesting. Like looking at the whole pattern. It's like, what if we're in the Elliott supercycle? If the entire 2015 to present structure is wave 1 of a grand supercycle, the current correction is wave 2, and the parabola that follows is the explosive wave 3. Wave 3 is always the most explosive, right? It's really good thesis and theory and hypothesis. A structure that historically produces the largest price multiplier, wave 3, of all wave types. Dead cat bounce pattern, a significant false recovery in, I believe that's just Q1 of 2027 3 to 5 area. Follow a retest of the lows $1.80 to $2.20 before the true parabola would constitute a textbook dead cat bounce that shakes out the last remaining weak hands before the vertical launch, right? The 21 to 50 weekly golden cross and the 2 and the 6 monthly estimated moving average golden cross both confirm this extended window, providing the slowest but most durable momentum confirmation. Following the geopolitical, or from the geopolitical lens, a concluded U.S.-Iran peace negotiation restoring Iranian oil exports to global markets would unleash commodity repricing dynamics, strengthen U.S. liquidity globally, and specifically benefit payment rail assets as Iranian institutions reconnect to SWIFT's ISO 20022 infrastructure. That just seems to be the going theme, right? With XRP as the logical neutral bridge, the scenario carries the highest price projection but demands the most patience and the most risk of macro disruption along the way. Look at the conservative, the base, and the grand supercycle 100 plus target of just the parabola, folks. Right? Just the parabola. And with that said and done, I don't want to make it too long because the longer I talk, the more the audio becomes disconnected from the video. But just remember, this is not financial advice. This is our thesis, theory, and providing macroeconomics and some things already in place. Some of it is speculation. Some of it is non-speculation, as the rails of the new financial system are already there. We just need a crisis reaction solution scenario to give the general population reason for the transition. And I believe that fits into the Kim Clement prophecies of a cataclysmic event leading into the summer. It could possibly be this summer of 2026, leading into summer. When does summer begin? Around June 2021, maybe. And if we're leading into the summer, that's possibly a few days or weeks before, or a few days or weeks right after June 2021. And that could be a smokescreen, a distraction as big money is moving, or the reason to totally migrate to ISO 20022 just a little bit more quicker as hacks, as many things can begin to unfold and take place in this vast geopolitical environment. A reason for the season. So market structure in place, no matter how you look at it, whether we're looking at logarithmic or whatnot, the catalyst will play out in the chart, and it's good to see the things that could happen as well as what we're looking at. and the events in the geopolitical spectrum that could sort of play out as we look at reaching the bottom of this structure here. The two E's, according to the Kim Clement prophecy: earthquake and eruption, a volcano in a national park that wishes to be destructive to this nation, but shall be contained, as a sign that many shall fall within the fall. All right, summer. Strange July, hypnotic November. Summer reaches to spring and to fall. Right? Summer says, I will be the mediator. Why choose they me? I bring smiles. I bring sunshine. But something is going down. And this time frame up in here could be the cataclysmic event leading into summer. And that could signify a bottom effect. As we turn the corner and just get into some interesting time frame scenarios, according to what Grok and Claude have put together based on the information in the history of the chart, with 4 really good scenarios, with scenario B just holding the strongest and likely to occur compared to scenario A. Or you can have a combination of 2 or 3, or all of the events just occurring at the same time, and this is going to be interesting. So this is a report with Catalyst Event. I can simply have the report update itself based on any triggering events that could happen, such as the Fed chair coming in, and whether he's hawkish or dovish, and the Iran negotiations, the Straits of Hormuz opening or closing, or hack this or that. Or this is going to be interesting, folks, because we're looking for that parabola, because the parabola usually signifies a significant upturn, and we are just on the verge of waiting for it. Now, how far will the markets turn down? Yet to be seen. I have to redraw this because I don't know if look how the green line is over the red line. I don't quite know if the RSI is turning up. It's over 45, slightly over 45. So rightfully so, you're leaving the zone. You hit the zone whenever the candlestick price action is below the 21 simple moving average, and price action as far as the RSI is below 45. So, and you can see the white line there is at 45.77 and appears to be turning up. So we do appear to be leaving the golden zone. And the golden zone simply signifies a great time to take a particular asset before you begin to leave the golden zone for increase. So we'll see if we still yet go down a little more, because we do have Elliott wave theory live on the chart, and that's giving us some potential price points of where things can go. And I'm looking at anywhere as low as 95 cents, $1.16, $1.30, and we are where we are right now. So for those who like to put limit orders into Coinbase or whatnot, and if there's a flash crash or anything drastically happens in the market, the liquidity could shoot down, just like we saw here with this wick back in October 2025. It shot down and just as fast came right back up, and that liquidity was grabbed, and many people who had their orders set to take at particular price points based on technical data, then they got in at very low prices. I'm pretty sure the same thing is going to continue to happen. And we're not going to see just prolonged low prices, right? So with that said and done, that is some really good thesis in theory, not financial advice, just really good technical analysis, causing you to look at political and geopolitical events and catalysts that can occur and how the scenarios play out based on the information in the history of the chart of what could likely trigger the next parabola.